All right, so today we're looking at JPMorgan Chase & Co., trying to figure out if this financial giant is actually a solid investment. Or are there maybe some problems on the horizon? We're going to dig into their history a little bit, talk about how they make money, look at their place in the industry, and think about what their future might look like. By the end, you should have a really solid understanding of their strengths and weaknesses and whether they're really worth a spot in your portfolio.
Yeah, it's an interesting time to be taking a look at them for sure.
Yes,
especially with all the changes happening in the financial world.
I totally agree. And one thing that really jumped out at me right away was how well they're doing when it comes to attracting those investors, the ones looking for higher yields.
Yeah, you're right. In 2023, they got over 80% of those yield-seeking flows, mostly by offering really competitive rates on things like CDs and that new JPMorgan premium deposit account they have.
Yeah, that's a pretty dominant position. And it seems like it's paying off for them. Their payments revenue hit a record $8.3 billion in 2023. That's a 45% increase year over year. And then on top of that, their wealth management division is just blowing up.
It really is. Their client investment assets in wealth management grew by 25% to $800 billion in 2023. And that's not even counting the First Republic acquisition.
Wait, hold on. So if you include First Republic, we're talking about $950 billion in assets. They're practically knocking on the door of $1 trillion.
Yeah, they are. And that acquisition was a big move. Taking over First Republic, which was facing some challenges, allowed JPMorgan Chase to really expand their reach, especially at a time when things are shifting so much in banking.
It's like they saw a chance and just went for it. Makes you wonder if they have more of those strategic acquisitions planned for the future.
Definitely makes you think. But even without acquisitions, their organic growth is pretty impressive. They've added a ton of new client relationships. It's up 60% since 2019. And they had a record 120,000 first-time investors join in 2023 alone.
Wow. Okay, so we've got a company that's attracting new clients and strategically expanding its reach. Now let's dive into the nitty-gritty of their financials. Their average yield on interest-earning assets jumped from 3.72% in 2022 to a pretty hefty 6.13% in 2023.
Yeah, that's a good increase. But we also have to look at the other side of that. Their non-performing exposure went up by $1.7 billion as of September 2024.
Oh, interesting. So bigger rewards often come with bigger risks. Right?
Exactly. And the areas where they're seeing most of that increase are in real estate, especially office space, and the technology, media, and telecommunications sector. Two areas that have been struggling a bit lately.
Okay, I see. So while those higher yields are definitely attractive, it sounds like we need to keep an eye on potential problems in those specific sectors.
For sure. Now, there was something else in their financial statements that I found interesting. In 2023, they had a lot of transfers from level 3 to level 2 assets.
Level 2 and level 3 assets. Can you break that down for us? What does that even mean, and why should we care?
Sure. Think of it like this. Level 3 assets are kind of like those mystery ingredients on a food label. You sort of know they're in there, but you're not really sure what they are or how they figure out their value. They're based on a lot of assumptions and estimates.
Okay, so not very transparent. And what about level 2 assets then?
Level 2 assets are more transparent. They base their value on actual market data you can see, which makes it more reliable.
Gotcha. So what does this shift from level 3 to level 2 tell us about JPMorgan Chase?
It suggests that they're trying to be more open about what they own. It means they're not relying as much on those mystery ingredient valuations, which could be a good sign for investors.
Interesting. It makes you wonder if this move towards more transparency is part of a bigger strategy or just a one-time thing.
Yeah, it's a good question. It definitely raises some interesting questions about their long-term plans, how they manage risk, and how they communicate with investors. But let's not get ahead of ourselves. We still have a lot more to talk about, starting with their overall strategy. You're right, transparency and trust are so important, especially when it comes to finance. And speaking of trust, JPMorgan Chase has been pretty clear about how they're committed to building businesses that are in it for the long haul. Businesses that actually help each other out, instead of just chasing after the latest trends.
Yeah, it seems like they're really trying to build a network of businesses where everything works together, not just some random collection of companies. One thing that really stood out to me in their materials was their focus on innovation, especially in artificial intelligence.
Oh, absolutely. They have something like 2,000 AI and machine learning experts working on over 400 different projects across the company. It's not just something they talk about. They're actually using it in their day-to-day operations to improve things.
So they're using AI for everything from marketing to fraud detection to risk management. It'll be interesting to see how all of that plays out in the long term.
For sure. But they also talk a lot about how important it is to be involved in the community. They've been investing in community centers and branches, especially in areas that haven't had as much investment in the past.
Yeah, they've got those community managers at those branches, right? People who are dedicated to building relationships with local businesses and residents.
Exactly. And it's not just about building relationships. They're also really committed to financial health education.
Yeah.
And helping people develop job skills. Between 2019 and 2023, they helped over 2 million people through those kinds of programs.
That's amazing.
Yeah.
It really shows that they're thinking about their impact on society as a whole, not just their bottom line. They're also pretty outspoken about their approach to climate change.
Yeah, they are. But they're advocating for a careful approach. They want to make their own decisions based on the facts and what the law requires, not just follow the latest trends.
So they're doing their homework and not just jumping on the bandwagon when it comes to climate-related stuff.
Yeah.
I like that they're thinking for themselves.
Me too. Another area they highlight is how dedicated they are to supporting clients, specifically in investment and middle market banking. In the last 5 years, they've provided over $318 billion in credit and capital to those clients.
Wow, that's a lot of money. It really shows how committed they are to helping their clients grow. But they also acknowledge that there's more competition these days from markets and fintech companies.
Oh, definitely. And that's where things get really interesting. The lines are getting blurrier between traditional banking and these new companies, especially fintech companies. They often have an advantage when it comes to regulations.
Which can be a real challenge for big institutions like JPMorgan Chase. They're operating in such a complicated regulatory environment. And they've been pretty vocal about wanting to see those regulations streamlined to promote competition but still protect consumers.
It's a tough balance. One thing they brought up that I found interesting was how they feel about relying on proxy advisor recommendations for voting.
Yeah, they seem to prefer doing their own research and making their own decisions.
Yeah.
Instead of just outsourcing it.
Exactly. It shows they're not afraid to think for themselves. Speaking of which, did you read that story about Jamie Dimon, the CEO? His early experience running a small hotel and restaurant really shaped how he views government regulation.
Oh, yeah. It gave him a firsthand look at how regulations can affect businesses, especially smaller ones. It definitely adds another layer to his leadership at JPMorgan Chase.
It does. But let's shift gears a little bit and talk about the overall industry and how competitive it is. JPMorgan Chase might be a leader in a lot of areas, but the financial world is changing so fast.
Totally. They might be ranked #1 in things like U.S. small business banking and credit card issuance and mortgage servicing. But the rules of the game are changing all the time.
Exactly. And they're fully aware that new players, especially those fintech companies, often have a regulatory edge that traditional banks have to figure out how to deal with. It's not a fair fight.
And then there's the rise of private credit, which is becoming a real competitor to traditional banking.
Yeah, that's a big one. They see both the good and bad sides of private credit. It's fast, flexible, and creative, but it can also be lacking in transparency. And who knows how the regulations might change down the line.
It's a double-edged sword for sure. JPMorgan Chase makes a strong case for why it's important to have a healthy and transparent financial system. They're worried that the growth of unregulated institutions could cause problems for market stability and consumer protection in the long run.
That's a valid concern. Too much growth in any area can create imbalances. But with all that said, I think it's time to move on to our investment assessment of JPMorgan Chase. What do you think? Based on everything we've talked about, what are their main strengths and weaknesses?
Well, they have a really strong track record of financial performance. They're strategically acquiring companies to expand their reach. They're embracing innovation, especially with AI. They're actively involved in communities. And they're really working to navigate that complex regulatory environment. Those all seem like good signs to me.
I agree. They're not just sitting back and relaxing. They're actively adapting and trying new things to stay ahead of the curve. But what about the risks? What are some potential downsides that investors should be aware of?
I think the increased competition from those less regulated companies is a big one. And the changing financial regulations are always a wild card. Plus, there's always the risk that comes with being exposed to specific sectors, like we saw with their non-performing loans in real estate and tech.
All good points. So taking all of that into account, what do you think about JPMorgan Chase as a potential investment?
Well, it seems like they're in a good position to take advantage of the trends shaping the financial world. But like with any investment, there are risks to consider. It really depends on your own investment goals and how much risk you're comfortable with.
That's a great point. There's no right answer for everyone when it comes to investing. But it's so important to understand a company's strengths and weaknesses and the bigger picture they're operating in, so you can make informed decisions.
I couldn't agree more. And I think we've done a pretty thorough job of that today. We've looked at JPMorgan Chase from all angles and given people a good foundation for making their own investment choices.
Yeah, we have. And for me, one of the big takeaways is just how much the financial world is changing. It's the companies that can change with it, the ones that can come up with new ideas. Those are the ones to keep an eye on.
Absolutely. It's not just about what they've done in the past. It's about understanding how they're setting themselves up for the future. What's their vision? What's their strategy? Those are the questions investors need to be asking.
And JPMorgan Chase is clearly trying to shape that future. They're not just reacting to changes. They're actually leading the way in many ways.
Right. And that willingness to be proactive, to embrace new ideas, and to challenge the status quo. I think that could give them a real advantage in the long run. Definitely. So we've talked about a lot today: their financials, their strategy, where they fit in the industry, and what kind of competition they're facing.
We have, and I think we've given people a good starting point for deciding whether to invest in JPMorgan Chase.
Exactly. But it's important to remember, the financial world never stands still. It's always changing. Staying curious and informed and asking the right questions. That's what makes a good investor.
Couldn't agree more. It's been great talking about this with you.
Same here. And thanks to everyone who's been listening. We hope this has been helpful. As always, we encourage you to do your own research and make the investment decisions that are right for you.